Good morning, good morning, good morning. Welcome back to Market Wake Up. My name's Jordan. This is John, and you're watching the one-stop shop to get up to date with everything you need to know in trading. Wow, I just lost my words there, John, but I'm hoping you're looking forward to it. Today, I'm going to digest a little bit. I have been away. It's glad to be back. We're going to digest how the markets have reacted over the weekend. There's a little bit to go through, and then look at the head for this week and all the macro mumbo jumbo that's going to happen. Tell you a couple trade ideas while doing it. So without further ado, let's get in to Market Wake Up. Okay. Before we begin, we can digest, right? We can go back. We can have a look at what's happened over the weekend. We can talk about what's happened today. But John, boy, I nailed the playbook. I mean, I nailed the playbook down to fading and positioning. I absolutely nailed it.
Yeah.
That's it. I'm done.
Okay, yeah, you can leave it to it.
I just wanted to join just to pump my own tires. But no, how you doing, John? It's good to be back.
Yeah, good. I'm glad you're back, to be honest, because I was there on Thursday, and then Friday I did this great intro. I hope you've seen it. I haven't.
You know,
no. I did a beautiful intro for you. I thought that you'd like it. So I was talking about about you and your relationship with Jordan Belfort. So it was fun. But no, I'm glad you're back, mate. You're a lot better than this than I am. So I appreciate you being here.
Ridiculous.
But yeah, no, I'm good, mate. I'm good. It was quite interesting last week. I felt like I was tired at the end of last week. I did a lot of eyeballs to screens, researching a lot of stuff, with any kind of headline that came out, involved with it, having a chat about it and looking at it. But I'm glad it's a quieter week. I'm glad we're back to the macro rather than the headline, essentially. Although headline over the weekend, I guess, was that Trump has got the red sweep now, and the Republican Party have that red sweep, which has been confirmed. Won all 7 swing states as well. That's rough for
Can we take a moment and just appreciate how wrong the polls were?
Very, yeah. Interesting.
Yeah. I mean, betting odds they were. This goes back to what we've said. Betting odds is more of a leading indicator. It's something I'd follow more. They did all right. I mean, going into before the polling kind of opened, they had him priced out at 60.
Yeah, they did. Yeah.
Sorry, what do I mean when I'm priced out at 60? I mean 60% chance of being elected, of winning the things. And that was before polling started. And I was like, wow, it really favored towards Trump at the end there.
Yeah, which was really super interesting. I mean, they can give themselves a pat on the back, I guess, and be like, yes, we look what we did. We predicted X, Y, and Z. But they only really changed their odds via demand for the odds, right? So obviously the greater public that were betting on Trump got it right in that case. And it's really interesting just to kind of think about how this plays out now going forward in terms of the red sweep and he has the House, he has the Senate. How this is going to impact going forward is going to be really interesting, like how many or what kind of policies are going to go through. But the beauty of it is we don't have to think about it just yet. I guess we can think about it sort of in January, in the new year. We can kind of go back to the macro because, it's going to be another interesting old week in terms of macro with all the inflation data coming up now.
I owe you $5.
Why?
Jerome Powell spoke on Thursday.
I still owe you a beer, so
he's still got a job. So at the moment.
Wow! That was my intro on Friday. Was it? I'm not leaving. I did the whole Jordan Belfort "I'm not leaving" intro. But it's quite interesting with that, wasn't it? Because he was like, he basically came out and said he's not allowed to get rid of him. But
jeez.
Yeah.
Really. I mean, imagine having to come out and defend your job to say legally you can't fire me.
To the President of the United States. I'm pretty sure he can have anybody like killed. So
I'm
probably
glad I'm not in his shoes. I'm glad I'm not in his shoes. But let's talk market leftovers. Okay, over the weekend, obviously politics has been a good chat. In the wild trades, guys, if you are in here, say hello. We are live, so make sure you chuck in your messages. Good morning, chaps. After last week, I'm looking forward to a fresh week. Luckily for us, all news presents opportunity in the market. That's right. It's more information that we can digest and then turn into tradable ideas, and that's what it's all about. So anything other than that kind of catch your attention over the one side piece, I guess it's not really relevant to the markets per se, is Israel-France game coming up. The French deploying 4,000 troops. So, and this was really interesting to me because I hadn't seen this in the media. There was a game between an Israeli club and Ajax in Amsterdam not too long ago. And apparently, as the Israeli fans were leaving, they were ambushed. And there's been a big uproar and all this other fun stuff. Media didn't I had to find it. I had to search it and find it in order to read bits on it. Long story short, this big game, Israel versus France, coming up, which is not going to be a competitive football game. I think France are arguably being one of the best teams in the world right now. So, but a lot of talk and worry around a kickoff in and around the ground.
Yeah, I did see it was actually covered on the UK news quite heavily. Okay. But yeah, I think obviously there's a lot of tension around, isn't there? And football matches in general can be a little bit feisty.
Hey, let's get 40,000 men. Let's get them really drunk on beer, and let's see what they do.
Exactly. Yeah. So I mean, that just adds to the heightened kind of interaction around all that, doesn't it? So yeah, don't think that's a particularly nice game to go to. I think if it was me, I'd probably not go.
You've got to miss it, Yeah. But yeah, other than that, look, it was a French bank holiday today. Same in Canada, same in the US, Remembrance Day today. So there is a bank holiday across there. We are expecting a little bit of a slow day in the markets. Although, and it's a big although, still coming off the election result, moving into the new week, there's still going to be a lot of repositioning going on. Repositioning, and you guys would have seen the movement. We'll dive into it in a little bit. But the initial move, the fade, then the actual move. And that's kind of what we're seeing now, which is an interesting to watch. It's an interesting one to be a part of. Talking freshly squeezed, John, before I get into the charts, before I get where we're priced at, is there anything that you're looking at today which stands out to you?
Not particularly. I mean, I'm going to talk in the big bite a little bit about the US dollar CAD and where that's positioned because, I wanted to talk a couple of seasonal plays that I've been looking at recently. So I'm looking at potentially a dollar CAD move, but it's kind of it's on the fence. It's actually lower.
Ooh. Wow, yeah, you're going against a very good seasonal play there.
I'm going against the seasonal play, but for good reason. So hopefully I can explain what's happening there in that situation. Only other things that have really kind of stood out to me is, I talked a lot about sort of platinum shorts, silver shorts. They've started to come to fruition nicely. They got pushed lower on the US election as well. Obviously, I guess commodities in general had a little bit of a bad time. Copper in particular had a little bit of a bad time when Trump got announced initially. That then rebounded. But I think it's important to think about how Trump acted in 2016 and what the markets did in 2016. I think there's been a big push at the moment for dollar's going to be bullish, blah, blah, blah. But in 2016, it wasn't actually, 2016, 17, 18 wasn't actually that great for the US dollar. The dollar actually weakened quite significantly. It was only really back in 2020, 2020 rolled around and we had COVID situation, things like that, where the dollar outperformed everything else. So I think it's an interesting concept to look into. There's been a lot of talk about the bullishness, and obviously I think the reaction would have been that the pricing of that was, I'm basically looking to say, has that all been priced in? What's the market going to do next?
Yeah, and it will be like, oh, quick, get over there, and then it will get over there, and then people will be like, oh, well, this is a bit overpriced. I don't want to get in here. And then by the time it comes back down, people are going to be like, oh, well, it's on a downtrend now. I don't want to buy it. Like it's just this this cycle that you get through with this. So you're right, taking caution. Have you seen the VIX?
I have not seen the VIX
Since the election.
I've seen it drop off a cliff.
Yeah,
which is what we forecasted to happen.
Yeah,
but I haven't seen it today, so I can't. I don't know where it's at today.
It's at 15.29. It's at 15.29, and we were talking almost 25s this time last week. But as you suggested there, we were forecasting a downfall. Why? Because market uncertainty is being removed, market certainty is being introduced. If investors are certain that Donald Trump is going to be president, which now he is, then they can invest with certainty on what they're betting on. Whereas when it was up in the air on a 50-50, it was like, oh, do I go that way? Do I go that way? I don't know what to do. It's more of, here you go. Let's have some fun. Long story short, for the NASDAQ, which I'm assuming you're asking there, Ayaz, bullish stocks across the board, electronic technology stocks, I think as well. I think if you are CEO of any of the S&P 500, other than an ESG-based company, which is let's say an outlier with Tesla, you're feeling pretty good right now. You've been celebrating because you know you're about to get tax cuts through the roof. You're about to have fun, and you're about to become one of the most powerful companies in the world. Already are, but plus some. So anything kind of equities in there, risk on assets in terms of US equities, I see potential long-term growth. This is the VIX you're looking at here. As you can see, dropped off the cliff. That's that uncertainty. Just before we get through all the prices of where we're at today and the little things that I've noticed since the election, I will answer Andre's question here. Andre, first time here. We're glad you're here. My name's Jordan. This is John. Welcome to Market Wake Up. You would have seen us in the boot camps week, which is awesome. You're currently reading Louise's mind-blowingly good book. Yeah, which one? There's six. There's six, Andre. So line them up. Which one are you reading? But no, she is fantastic. If you want to watch Louise's content, youtube.com/mindovermarkets is where you can find Louise as well. But I'm glad you've stuck around from that boot camp. It was good fun to do it. Good fun to be a part of it, and a great opportunity to kind of show what we do and how we do it, and bring retail traders together. And that's what it's all about.
Absolutely.
Any assets surprise you, John, from the election result?
Not really. I think Tesla was the jump on Tesla. I thought was quite interesting because I talked about this in the stream last week. There's a big contradiction of what's happening there, and also I was thinking about this. Now, Musk was on Joe Rogan's podcast as well, and I was listening to him talk and things like that. And there was a moment where he was talking about sort of tariffs not necessarily being good for his companies because a lot of the parts get made in like China and whatnot. So that will make Tesla's production of cars more expensive. So that's something I found quite interesting because obviously Trump is in Elon is in Trump's ear, right? We know that they're like pally now. They're like Bezzy mates. So
I one of the advisors, I believe.
Well, probably, yeah, I think so. It's on the. I don't know whether it's been confirmed yet, but there is a lot of talk about that, isn't there? So I don't know how that's going to work out for them, like. Because I don't know whether Trump is very. I think when he has something in his head, he'll do it. Rather than will he listen to Elon and go, actually, Kate, I won't do that as much. So it's going to be an interesting Trump presidency because maybe he's trying to do things a bit differently this time, and maybe we won't see what we saw before. He has talked, and I mean, I'm sorry, but when you say tariffs is the most beautiful word in the dictionary, you're going to use them. You are going to use them. So how that...
No, he's not been clear on the scale, right? Because he said 20, 30, 40, 50, 60. So it could be anywhere there, right? And a 20% tariff, like, people will live with that. I can see that. Like, it's not ideal, don't get me wrong. But in a scenario, I think businesses will go, look, if we can still sell to the US market, we have to pay 20% in tax. So be it the US market's worth $4 billion, you know. So I think that's his point. His point is, hey, we're selling, our country, our people, everything that they buy, we're actually giving to foreign nations and not taxing them enough on it. And he's like, well, why? Why are we doing this? And I think that's his argument. I think that's why he's got into office.
Yeah. No, yeah, absolutely. That has been probably one of the forefronts of it. But yeah, just kind of relating it back to Elon, and Tesla, I don't know whether that price in there is just a bit out of whack. That's what I would say, because it did jump a little bit. It then carried on moving higher, and has continued to move higher.
Yeah, absolutely. Yeah. I was reading my notes this morning of that playbook and everything that I've written down, and one of them was just in brackets Tesla by Tesla, and I didn't, John. I didn't buy Tesla, but because even if you got in after the gap, which would have been risky, you're still up 12%.
Yeah,
you're still up 12%. Which have you seen Dogecoin?
Yeah, well, I did look at this as well because I thought actually Doge is part of what Elon was all about, and that's absolutely gone crazy. Look at the meme that comes up as well. Yeah, so when you type in Dogecoin, I found this out on a stream myself. Type in Dogecoin, and the Doge dog comes across your screen. Isn't that wild? I was just
gamified.
This is a financial asset, and it's just a dog walks across the screen. Yeah,
65%. But cryptocurrency as a whole, another one of those big buys. I don't think it'll last. I think we'll taper off for a little bit, fade. US dollar, Japanese yen for me was the most beautiful reaction.
Yeah.
That was kind of exactly what I wanted. Initial bullish dollar. All right, let's fade that initial move. You can see in the daily here. Let me get a little bit lower. Bullish dollar. Fade the initial move after the election, which cooled right the way down, and then look for the actual repositioning. Now, the actual repositioning is suggesting that US dollar strength, which is interesting, which is why I'm interested to find your big buy. But before we jump into the big buy, I'm going to run you through all the prices and where we are. Andre, it's also your first time. Welcome in. I hope you're enjoying it. We do have a little bit of an interesting take on oil. It's a risky asset to be involved in right now geopolitically. All right. But with Donald being in, I'd say buy. I think oil is going to find some demand. That's not financial advice. Don't actually do that. Do your own research. I know I said that like it was, but it's not. Don't do that, and don't hate me. Tariff. Elon mentioned in Rogan's that government need to give business time to adjust. He'll calm down. Let's see. But let's get through. All right, Aussie dollar, we're flat. The euro is down 0.23. The pound is up 0.12. US dollar CAD up 0.13 as well. US dollar Japanese yen up 0.8. Really moving today. And that's, I think, an inkling. I think that's showing you where money is flowing right now. And that's something I might want to take part in. The XJO or the Oz 200 is up 0.5%. The DAX is up 1.1%. The Nikkei is up 1.5%. The FTSE is up 0.7%. And the S&P 500 is up 0.3%. The FTSE reactions are very interesting one. This is the difference between Donald Trump for America and Donald Trump for the rest of the world. The initial reaction is like, oh, yes, sweet, Donald Trump's getting, this is good for equities, buy. Oh, wait, we're not US-based equities. Get out, sell. And this chart kind of shows you that reaction. Buy stocks. Oh, boy, get out. Sell stocks. And that's kind of showing what's happened. But today's pre-market conditions really pushing it higher at the moment. The FTSE, as I said, up 0.75. Coffee's down 1.73. I actually saw an uptick on the Trump reaction, which riddle me that one. Emerging markets, I thought were going to be a little bit more damaged, but it looks like the Brazilian lira might find a little bit of growth. Gold's down 0.5%. You can have a look at gold's reaction here as well. Nat gas up 10%.
Wow. Lovely nat gas play that was. We talked about this from a seasonal perspective, as well as there was a commitment to trade a signal long nat gas, and this one's been doing really nice, right in that sort of demand zone we were talking about. So it was good. Yeah,
natural gas 10%. Welcome to the party. Silver unchanged, sugar up 0.3%, oil unchanged, Bitcoin up 1%, Ethereum down 1.2%. Bond yields relatively unchanged. The US 30-year bond, though, not the yield, is heading higher at the moment. So that is quite interesting to see bonds and treasuries gaining value with the bond yields coming down and obviously the Fed rate. They didn't cut last week. That would have been funny, wouldn't it, if you just did something to mess with Trump. Just, hey, yeah, here's 50 basis points. Let's see what happens. That would have been funny, a real stick. But no, he essentially said we're waiting to December. We need more data, and we might not even cut in December.
Yeah, I mean, the Fed have got a really interesting job now. Because
now,
well, they have an interesting job anyway, I guess. But it's the unknown is scary with Trump, and I remember when Trump was around, and basically a tweet would move the markets. So are we going to see that reaction again this time? I don't think so. Depends how aggressive the tweet will be, I guess. In terms of what he's talking about. But I don't, it's a really difficult one to kind of judge this time, because politically it's been interesting, but also macros environment in the US has been really interesting as well. In terms of the labor market data we had recently was shocking, to say the least. And he kind of touched upon it, Jerome Powell did, saying that it was a lot weaker than they expected, which comments like that are quite interesting. But then in the Q&A after, says no, the labour market's still resilient, so we still feel like we're restrictive in policy. And you're getting these mixed messages still from the Fed right now, and I think they obviously do it on purpose because they don't want the market to go and price in massive moves and shock the market X, Y, and Z. He's not going to come out and say, yeah, we're in the shit, it's going in the bin, are they? So he's going to be very much just kind of trying to keep control in that sense. But I think that when I kind of look at what happened with Trump in the past and what's going to happen in the future, how that plays into what the Fed do is a huge unknown. I would think that we're probably going to see a growing US economy, because they're cutting into an economy that is growing anyway, and that could necessarily be stimulating. But we have inflation data coming up. Yeah.
Inflation. That's one of the things. Like, Trump has the ability right now to reignite inflation on a big way, in a big way. And if they're not careful, he will. Not as in like everyone else has to play for Trump, but even if Trump's not careful, like, it is very quick for a lot of the things he's promised. If he'd enact them right now, the inflation would go through the roof, not just in US, but globally.
Yeah, this is why it's got me feeling that he's not going to do it straight away.
Which he might be an intelligence.
He has talked about not necessarily paying down the debt essentially, and also not necessarily doing the expansive things immediately. So I was watching a few podcasts and some talks of sort of economists, and they were saying that there's a good possibility that
love them.
There's a good possibility that he would do the things that wouldn't necessarily be about growth first, suffer a little bit of pain to then receive growth through the latter years of his presidency, so that coming to the end of it, he can say he was the greatest president to ever exist again. So it's interesting in that sense.
Anyway, let's enough about politics. Let's get in to your big bite, shall we? Let's move into it. The big bite. What have you got for us, John?
Well, I'm talking dollar CAD today, because one, from a technical perspective, I think all retail traders out there will be looking at dollar CAD right now. It's at a big resistance. It's at a big range high, right? Now, typically in that sense, if I just go up to the weekly chart here and zoom out a little bit and fit this onto your screen, you would be like, okay, we're at range highs, I'm going to go short. Or you might be thinking that this market is really bullish, I'm going to jump on it. So hopefully I'm going to help answer that question today, from my perspective, because my perspective on this is actually to be potentially on the short side of this. Now, there are a couple of different reasons why, okay? And I can see you're already like, ugh. Now, yes, Trump coming in is bullish. Where's my camera? Bullish US dollars, right? But first thing I did was I looked at how dollar CAD reacted when he was first in, right? And we did get an initial little bit of bullishness, right, out of the market. But after that, we fell quite aggressively through 2017 anyway. Now, obviously, that is some months later. But the positioning right now on dollar CAD is really interesting because we're at this key area, I would say, of structure, of resistance from a technical point of view. We could go higher. We could blast into the 143s, but commitment to trader report positioning is something that's interesting me right now. Okay. Now, when we talked about the sell signal or the long signal, sorry, on CAD before, the positioning from the hedge funds net was around a very similar level than we're at now. Okay, so this was the previous position just through here where CAD futures rallied in line with our expectations. We're coming into a very similar area as well now. So what that's telling me is we had that buying pressure come in from the range lows like we expected. Price has now reached the range lows again, and we're at a similar level of selling pressure from the hedge funds. Does that mean that price is going to turn though? No. Okay, that doesn't mean that price is going to turn. It just means that we've got a similar situation. We still have to add our other confirmations in. But there was some other interesting research that I was doing, and it involves the Canadian dollar. I'm going to talk about the seasonal in a second that you've alluded to, but I've also found another one that might change your mind a little bit. But have you heard of the Keystone XL pipeline?
Yes.
So that is the pipeline that connects Canada through to the south of the US.
Texas.
Yeah. So that was scrapped in 2021 by the Biden administration. But Trump was pro this pipeline, right? And there is a big talk around at the moment. I haven't seen it reported that much, but there's a big talk sort of on the oil market pipelines, pardon the pun, that this could be back on track. This could be something that starts to kind of reignite. So that's a positive for Canada, in my opinion, because they're going to be able to give more oil. They're going to be able to sell more oil, essentially. Now, if you look at the trader balance in Canada at the moment, it's not great. They've been in a deficit for quite a while. So they need to sort that situation out. But oil prices have also been quite low. And usually we have that, commodity correlation with CAD. When oil prices are lower, we typically see a weaker Canadian dollar. But like you mentioned earlier, Trump could be positive for oil. He loves oil. He's a big oil guy. Probably a lot of his mates and buddies that he plays golf with are big oil guys. So he wants to try and please those type of people. And I think in a sense that could also play into the Canadian dollar's hands at the moment. There could be, if we do see a resurgence in oil prices, then we could begin to see a little bit of a turnaround here as well for dollar CAD. So we're at a point of interest, right? Let's just have a quick look at some seasonals as well. So I'm just going to bring these down. So this is a dollar CAD seasonal. Okay, now I've only got 2 events in here right now, but this was the event that Donald Trump was involved with. Okay, so that's why I've highlighted it. But this was the seasonals after when Donald Trump and Biden got into administration. Okay, so what we typically see from dollar CAD prices is a small little uptick and then a rollover in the next sort of 30 days after the event. So that, I thought, again, that was quite an interesting price. And now the dollar CAD seasonal that you were looking at before, right, if I actually just put all displays, you can see that from November to December, we usually see a rally within the market. Last year didn't work out so well. 2020 didn't work out so well. 2016 didn't work out so well either. So that's quite interesting to me, because if we go check out the election years and we look at a peak in November, usually around the 20th of November down to December, we get a really interesting seasonal play that could be forming within the market. So I don't know how you feel about this seasonal play. You're very much well versed in Seasonax than I am, but 80%, am I saying that correct? 80% win rate on this particular move. Average
Over
return over 5 years, over 5 events.
Yeah,
over 5 events. And you don't think that's interesting?
4 right, 1 wrong. Right, and like the argument of what happened when Trump got office in 2016, I don't think is validated anymore. I feel I feel when Trump got in 2016, people didn't know what to expect. It was like, holy moly, he actually got in office. What the hell? Like, what is going to happen here? Someone's going to hit the big red button. Like, that was generally like headlines. Oh shit, he's got control of nukes, right? Whereas this time round, there's an expectation. Like, I think we know what we're going to get.
Right. So there was an expectation when he hit the big red button. Did the markets react like that though? Because in that case, I thought dollar would have been very rampant through his period, because people would have been, we need to keep an element of risk here. And in risk markets, dollar usually performs very well in those markets, and it didn't.
Yeah, I think it's still like with early pricing. I mean, look at the difference between early pricing in the first few days here compared to what it was back in 2016. There's a huge difference.
Oh, yeah. There wasn't.
And the difference is because it's like, I feel more confident backing US-based equities and the US dollar and everything now that Trump's in office than I would have been in 2016, because I would have been like, hey, there's a lunatic at the wheel. I don't know much about this. What on earth's happening? Whereas now it's like, okay, I understand his character. I understand how he thinks. Part of what he's saying, if he actually pulls off, I can see it working. He might be crazy enough to us to actually back him, and that's I think that's the difference, and that's why I don't like analyzing the 2016, just because I think it's a, so that's one thing, right? I'm going to pick apart your analysis. I'm going to become the boss. I'm going to become the boss. The second thing is the seasonal play from early November to mid-December or early December. That has a 70% hit rate over 20 years. So that's quite heavy. That is quite heavy. That's it. So I'm leaning towards, oh boy, like that's a good, plus a bit of positivity for the US dollar. Now I know, hang on, I know positivity for the CAD. I can see that angle. Okay, I can see the angle for a positive CAD. Can I see the angle that US opening up a pipeline in the US that will help the US get more oil, benefit the CAD more than it benefits the US dollar? No. Do I see it benefiting the Canadian dollar? Absolutely, because they'll be buying Canadian oil, right? And it'll be running straight through. But it will also benefit the US dollar arguably more, just because the how quick they'll be getting the volume of oil that they can then produce and sell elsewhere, or whatever it might be, the war machine that they have. I can see it having just as big as a positive impact, if not a bigger positive impact on the US dollar, as well as CAD. So still stick with your oil bullish, your CAD bullish. Yes. Pitting it against the currency that's going to cause that currency to be bullish, I don't know.
But the beauty of that is we're in a range.
Not for long, John. Not for long. Not for long, my friend. No, I think me personally, how I've always traded, wicks don't count. Like, as in when I'm looking at range bound. So I know we would trade it up there, but if we're already trading in and around for like a few days inside like top wicks, for me, it already shows the weakness of the top. It already shows the weakness of the range.
Yes, I know what you're saying, because like if we look at how prices consolidating here right now, I'm the same. Auction market theory, if anybody does any of that kind of stuff, usually if we've got, let's say, a value area high on volume and the market consolidates at that value area high, typically we see a breakout to the upside. So yeah, I completely understand where you're coming from there. I just like the hedge fund position on this at the moment, and I'm a big cot guy, so that's where my head's at the moment.
No, I like it. And this is the beauty of trading, because we don't have to give brokers any money, John. We can just bet between each other. We can cut out commissions and just have a straight cash deal.
Great idea, actually.
It's look, I see US dollar CADs following the seasonal play. I do. I would take the bet. I'd take the bet against you if you're up for it.
Yeah, let's do it.
Yeah. What's the bet?
Okay. So I mean, anyone in the chat, my betting record on this is not great in terms of, because George seems to get me on the right assets to pit me against. Okay, let's say what we're going to just say, like where the price will be, like what we did with Euro.
Yeah, let's go mid-December, December 15, where we are.
December 15, dollar CAD. 137.50.
130.
137.
Okay, sorry.
Not 130. No.
I was like, John, just send me your money now. What are we?
No.
137
137.50.
in December, mid-December. That's a long way away. So you're expecting not much volatility.
Yeah, I'm not expecting some huge run around turn. Like this was the cut signal we had back, which I was talking heavily about getting short dollar CAD. This was the bullish cut signal that we had from the US dollar's point of view. Do we have a cut signal yet? Not right now. But what I'm thinking is going to happen is something like this. That's where
I'll go over the 141s.
Okay, I'll give you that.
I'll go over the 141s.
So I'm gonna put lines on the chart right now.
Yeah,
we're gonna put 141. I mean,
write it down.
You did beat me in terms of the euro analysis. So let's just add these to the charts right now. Chat, what do you think?
Yeah, what do you reckon? I'm going to go the 141s. I agree with the CAD strength. If anything, I think the CAD strength will put us sideways for a little bit. But in the event they do open that pipeline, I'd say that's expansive territory. You even said Trump's not going to go anything expansive. He's going to put the brakes on for a little bit and recap some of this debt. That's a big expansion, reopening that line and building that.
That wouldn't happen initially, would it?
Yeah, so by mid-December. Oof.
Yeah, I like this. I'm not a fan of dollar where the levels are.
That's fair. So. I like it. Oh, there's your bet. There's your take it to go. We went over time. Guys, I hope you enjoyed it. It's good to be back. Happy Monday. Have a safe trading week. We'll chat to you all tomorrow. Someone did ask a question. How often do we do this? Yes, we do this every day, every morning. You'll see us here at 9 a.m. Nope. 8:30 a.m. British Standard. Nope. GMT. International Business Time. You'll get there. Guys, thank you so much for joining us. We'll see you soon. Cheers.